Hi, I'm Dan Primack at PEHub.com, and here are your top 3 private equity stories for today, Thursday, January 3rd. Leading us off, PE Hub has learned that Plaxo, the online social networking company, has received an unsolicited buyout offer of approximately $200 million. Now, there was a story in this morning's New York Times that they'd retained Revolution Partners as its investment bank and was looking for around $100 million. But again, we've learned that the unsolicited offer was around $200, and it has not formally retained any investment bank, Revolution or others. What a source tells me instead is that investment banks are now coming to Plaxo and saying they have potential acquirers. Plaxo has decided to seriously consider the current offer and is kicking the tires elsewhere. One possible problem for them could be that they launched a new social networking service about 3 months ago, and they're not sure that the existing offer or any other potential ones they've been hearing have the price of that growth baked in. On the flip side, of course, if that product doesn't turn out to be terribly successful, these might be the best offers Plaxo can get. Story number two is a follow-up to yesterday. Imperium Renewables has withdrawn its IPO. It had filed to raise around $345 million back in May. Now, this news follows on the heels of Martin Tobias quitting as chairman and CEO of the company. I spoke yesterday with Tobias, who was actually sitting in his condo in Hawaii. He says the decision to leave was purely his and that he and the board had been in negotiations, or at least discussions about it, for several months. He declined to comment on speculation, though, that the final decision to leave was extremely sudden and wasn't terribly amenable. When one considers that the official announcement of it from Imperium came the day before Christmas, and there was less than 50 words about Tobias actually leaving, and nothing such as, "We regret that Martin Tobias is leaving," or "We thank him for his service." Tobias does say he hopes to stay as a senior advisor to the company, and he is still obviously a major shareholder. He does not plan to retain his board seat. Story number 3 is fundraising. There hasn't been that much in the last month, but Crestview Partners, a middle market firm based out of New York, has raised around $1.7 billion for its second fund, PE Hub has learned. It hopes to close later this year, probably a little bit north of $2 billion. This firm, last time out, for its debut fund, raised under $1 billion, so it's more indication that the middle markets are hot right now among limited partners, and that the middle market, what it's defined as, continues to get larger. Those are your top 3. Be sure to check back here tomorrow morning for another top 3, and at PEHub.com all day for private equity news and analysis.